Hello and welcome to this week's Inner Circle. It's a pretty quiet week last week, but we're going to go through all the markets and just see what we've got. Just starting off with silver, trapped in sideways, had some positives and some negatives this week, but bounded by those two black lines. If we move on to gold, which is also pretty quiet, we have what I call a bear trap below, down there at 1262, and then this major level at 1308.4, and we've respected this range 3 times now. However, with the dollar index, that was one of the more interesting ones. Spoke about it on the daily update, about how 94.30 was the key level, but then also the weekly level at 94.10, and we bottomed out just a tick above that. In the short term, we broke out through resistance, so we remain on course as we enter a huge amount of space up to 98.05, so a long way to go there. But the fact that it held support so beautifully, it was also the third range deviation pivot down, so very powerful area for the day. If I do the euro dollar, 116.17 has been the important point. We've sort of ebbed either side of it. We have closed below it. The fact that the dollar index has broken up lends more to the thought that we can now, having gone sideways for a week, again open up this huge amount of space. So both looking the same way. Move on to the pound. The pound had a failed move higher, then dovish Bank of England. We haven't quite taken out 130.49, which is short-term intraday level, but we are of course below the daily. So again, any close below 130.40 this week, the week coming, that would open up the downside as well. If we do the Aussie dollar, this has been a short position. Actually, I should just say dollar index permission was there to get long on Friday. Aussie dollar was pretty poor, missed our stop at 77.40 by 10 ticks on Thursday, went to the limit of range at third deviation down at 76.39, which was the low to the tick, on target to reach 75.25. Do the Kiwi, which has been interesting, had the negative signal a few weeks ago. The target was down here at the monthly, received some positives, and actually the Kiwi's done pretty well if you compare it to other currencies, which would have manifested itself on the cross rates. On dollar CAD, we had broken out through this weekly, but then we had the stepping process finish. So on 120 and 240 minute, tells us that the trend is dying. So even though it was in breakout mode, it couldn't extend itself, and so that's having hit these range relativity extremes back in September. Looks like that uptrend is over for now. Moving on to dollar yen, pretty quiet this week, although it is sitting at the top of the trend. 118.66 is the target, which is still a fair way away. So dollar strength theme remains on board. When looking at the majors, what's the weakest, what's the strongest? So we know the Kiwi's the strongest, and has been as it hit that major support. There was a time continuation sell on the euro Kiwi, close to that monthly resistance, and on Friday we took out that daily support, having held it to the tick on Wednesday. So Kiwi on the crosses is the one that's the most interesting. The other main market that we've been focusing on this week is crude oil. Broke out Friday last week decisively, had a minor negative here, but it wasn't at resistance, so we're not that interested in it. And then we've broken out again on Friday. 59.35 is the major target for oil. If you think about what the dollar's doing, the performance is particularly impressive. Moving on to indexes, this is the S&P E-mini. A daily Henkin-Ashi level has moved up, so support has risen up to 25.55, I think, 25, Let's get the mouse right. 25, yeah, 25.57. And that's the first time support has risen since the breakout, so that's an important reference point. If we do the Nasdaq, had all the earnings pretty much out of the way. Apple was impressive and beat, and not surprisingly, due to that, we were still up. Remember, on payroll, said it before, it doesn't really matter what payroll does. On the day, US market goes up. It's irrelevant. So having had a power play buy expansion at the end of last week, continuing to move higher. Dow is a little bit of the poor relation, sort of edging higher, but pretty quiet. But a daily level has moved up, so 23.250. So at least some support has moved up. One of the problems for longs has been the fact that only short-term levels have been going up. Might as well have a quick look at the Russell, which was leading and has stopped leading. So we had the breakout, went out there, we had this stepping process, which is these diamonds telling us that this trend had ended, and pretty poor really, and actually a daily level has moved to resistance. So the rotation continues. Rotation went back into tech and out of small cap. Euro down, DAX up, and we had the power play buy signal the week before from that monthly support point, which it held to the tick, and we've just extended higher. Big gap up on Wednesday. By next Wednesday, if that gap has not been filled, it is no longer part of our analysis. People who subscribers know the complete theory of gaps, but that's one of them. If we do the Euro stocks, still breakout, but not as strong, but no resistance. And finally, FTSE, pound down, FTSE up, as many of the components have their earnings in dollars. So in time continuation power play, new all-time highs, needs to hold 74.85. That's pretty critical, but like we saw what that DAX did, so you will have a day where it's the low to the tick, and then away we go. Quick word on Australia, more Jeremy's world than mine, but we had the breakout after all this sideways, a lot of energy, just expect the market to extend higher, and that's exactly what it's doing. Moving on to commodities, I had a signal on wheat. It's got to take out some resistance points short term, which we mentioned in the daily updates and the channel, but definitely of interest. This daily level has moved to the bottom, so it had been there for a long time, so that's the first sign of some decent support building. Not saying sugar, we needed a close above 15.01 last week in order for us to get long. It didn't manage it, and then we had a minor negative. It's come back down, so still in sideways, waiting for something to happen. We've also had a signal in soy meal, and that's got some intraday levels it needs to take out as well as this weekly. So 31.70, I think we just about closed above it, but yeah, just by 2 ticks, couldn't follow through. The dollar being strong is a bit of a headway there. Doesn't really feel like the right time of year that anything major can happen in meal. Finally, bond markets had the buy signal the week before at the daily support, so pops and time continuation was just up all week. Looks like we can rotate back up to 155.01. We do the 10-year. The shorter end of the curve is not as strong, but there is no resistance. So again, we had that buy signal. So there's a bit of room there for it to rally. In Europe, slightly different story. We look at the Bund, held a weekly support, and we've got this big level at 163.14, so very much interested in that. And just finally on the UK side, had an interest rate rise this week, although that just unwound what they did post-Brexit, so we had a big update on Thursday, plenty of space, key level below 123.12. Okay, I think we'll